Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because consolidation after a breakout usually results in continuation, and I still believe August is going to end up being a good month. We just have to be patient enough to survive the chop. This feels like a perfect leverage washout before we re-enter price discovery, and notice how the corrections have been getting quicker and shallower as Bitcoin has gone higher. This is exactly what you see as you approach a blow off top. Now, it's hard to know how long the blow off top is going to go on for or exactly when it's going to end, but it is crazy to think that a 9% correction on Bitcoin has been able to fully reset market sentiment back to the neutral region, which is exactly what you'd want to see before our next move higher. And we've somehow managed to fully reset market sentiment while still maintaining our higher high and higher low structure, and by staying above our major pivot level at 110,000. Bitcoin has also managed to print everybody's favorite chart pattern, the inverse head and shoulders, and we've now retested the neckline, which usually is the final retest before the rally. And although I don't put a ton of weight into these chart patterns because they can easily be changed or invalidated, it is a nice confluence because the invalidation for this inverse head and shoulders will be that 110K-ish level as well. And this level is important to watch because it is where we had our range breakout, and every single time Bitcoin has had a range breakout this cycle, we have not looked back. So if Bitcoin ends up falling back below that 110,000 level, it would be a major sign of weakness, because if it were bullish and all of these narratives were right about supply shock this or ETF inflows that, price should not go back below a major pivot like that, because then it ends up running the risk of being a false breakout, and those tend to be major warning signs of much larger corrections. So we really don't want to see us fall back below that level on a weekly closing basis. And this is exactly why Monday's free weekly report was called Maintaining Structure, because this is the main thing I'm watching as of right now. We've been able to liquidate all of the leverage while still maintaining structure, and we're seeing the exact type of volatility you'd expect at this phase of the cycle. So for me, things are very straightforward right now. While everybody's flipping back and forth between bullish and bearish based on the latest tariff headline or the latest corporate treasury, I didn't make any changes to my portfolio this week because this just feels like some chop and leverage washout, and I don't feel the need to take more profits quite yet. But I also haven't had my bullish thesis invalidated because we're still holding above major support levels. So I'm happy to let my remaining spot positions ride higher in case this rally continues and Bitcoin re-enters price discovery. But I do have this cash position that I've locked in along the way in case we do end up breaking market structure and my thesis ends up getting invalidated. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market, or common mistakes I see so many investors making right now, you can check out the Crypto Enjoyers program in the video description. But as of right now, Bitcoin is still comfortably in the middle of our expensive region based on how far it is from its 200-week moving average. We did see some aggressive profit taking as it approached the very expensive region, but I do believe we're going to move higher before we end up seeing any type of major cycle top. And I know a lot of people get triggered by this chart because I'm calling Bitcoin expensive at 110,000 when there's people out there promising 250K Bitcoin this year and 1 million per Bitcoin over time. And don't get me wrong, I would be absolutely ecstatic if we saw a 250K Bitcoin this year. I just don't think it's going to happen. And the higher we go, the more people are going to cling on to that narrative. And every single day over the past few months, I'm constantly seeing people calling for an imminent supply shock, and the exchanges are running out of Bitcoin, and there's going to be no Bitcoin left for everybody, and price is going to teleport. But what these people fail to understand is that although Bitcoin has a fixed supply, we also have to account for how big the market cap is today. And at $2.3 trillion, I think most people completely underestimate how big this market is and how much money it takes to even move Bitcoin by 10%. And as price goes higher, it just gets harder and harder for demand to keep up with that increasing supply. And I do believe Bitcoin will keep going higher in the long term. I think most investors just underestimate how long it will take. A very clear example of this supply is Binance's daily net inflows. This is only one exchange, and they averaged 7,000 Bitcoin in inflows per day over the past 30 days. If you multiply that by a Bitcoin price of, let's say, 120,000, that's around $800 million a day coming onto the exchange, and you would assume it would be to sell and take profits. So multiply that roughly 800 million by 30 days in a month, and that's about 25 billion in Bitcoin coming to just Binance alone in 1 month to perhaps be sold. And that's only 1% of the entire market cap. And this profit taking is what keeps causing these consolidations and corrections when everybody is expecting the price to double overnight because they underestimate the size of this market now. You even see it with the ETFs. We're always talking about how great the inflows are, but we also see large outflows as well because these things don't go up in a straight line. Investors pile in, they make a bunch of money, they lock in some profits, we consolidate. Some long-term holders buy back from short-term holders as people panic sell, and then we continue our next move higher once we have found our supply and demand equilibrium once again. So although I don't expect a 250K Bitcoin by this year, I'm still expecting us to go higher, and I'm still expecting Bitcoin to do well moving forward, especially starting with August. We just need to maintain that market structure as we spoke about, and I do believe Bitcoin can break higher very soon. As for Ethereum, it looks like very clear consolidation to me. We front ran the range high as investors took profits and it got dragged down by Bitcoin. We held the range mid, and as of right now, as long as we consolidate between these two levels, I'm expecting a break higher, kind of similar to what we saw in May and early June. We had a quick move up as everybody was caught off guard and had to FOMO back in. Then we consolidated for a while until everybody was bored and we liquidated all the leverage. Quick reprice higher again, and now we're consolidating again in a similar fashion. And I do believe it will continue to the upside as long as we stay above that range mid-level. Ethereum saw some outflows alongside Bitcoin when it comes to the spot ETFs, but funny enough, Ethereum actually had net inflows yesterday, even though Bitcoin saw outflows, so we might still be seeing that rotation. But when you look at the cumulative inflows for Ethereum, they still look incredible for the amount of inflows we've seen in July alone. And as long as this pattern continues, it's very hard not to be bullish on Ethereum here. Similar thing with these corporate treasuries. We saw Bitmine cross 3 billion in Ethereum holdings. We saw SharpLink get very close to 2 billion, and we see these treasury companies taking up Ethereum supply and absorbing that supply off of the market, which should put upward pressure on price. And we're seeing mega whales accumulating Ethereum as well. If you look at the net buying from these mega whale addresses, you can see a huge spike recently that dwarfs anything we've seen going all the way back to January of this year. So it's no surprise that Ethereum Bitcoin is consolidating and doing well, looking for its next move higher. And it's really hard not to be optimistic on Ethereum based on the supply demand dynamics that we're seeing right now. I'm also expecting more tailwinds for assets like Ethereum and Solana as we see more and more regulatory clarity. We have the CFTC announcing they're starting a crypto sprint, and I do not believe this clarity is priced in. This asset class has been beat down for so long that I don't think all of this is going to get priced in within a week or two. And we're seeing a really impressive growth here in the amount of capital going into digital assets as an alternative asset class. Here we are looking at things like private equity, private debt, real estate, hedge funds. So it's leaving out the biggest asset classes like stocks, bonds, commodities. And you can see that digital assets have gone from essentially zero in 2015 to now getting close to 10 to 12% of these alternative asset flows now that we have the spot ETF products, and now that it feels a lot less risky to allocate to this asset class because of the regulatory shift. As for Solana, still holding a range mid, this is the major pivot level that we want to see Solana hold. I really don't want to see Solana fall below this level because it could be a bit of a warning sign. Solana treasuries are buying up some Solana, but it's nothing compared to the inflows we're seeing for Ethereum right now, so it's not getting as much of a benefit. And Solana's main narrative, which was all of the meme coin speculation, seems to have dropped significantly, which is great for this industry as a whole, but not great for Solana's price in the short term. The volumes and revenue are down about 80% from the January peak, down from about 125 million all the way to just 25 million, which is great for the longer term prospects of this asset class, but it is reducing demand for Solana in the short term. But we are still seeing other promising narratives developing, like tokenized stocks or stablecoin growth. So I still believe there's going to be plenty of innovation and excitement for this asset class, even if we see a reduction in meme coin speculation. And Solana Bitcoin continues to look okay, putting in higher highs and higher lows. We don't want to see a breakdown on this one either, but it does seem like things are beginning to heat up. We're seeing more and more IPOs, with Figure Technology joining the IPO wave most recently with an SEC filing. We also see that CoinDesk is trying to do an IPO as well, and they always try to make sure to do these IPOs when they believe the market is the hottest, because that'll get them the highest valuation. And we're also seeing a bit of signs of froth here, with a stock soaring after they announced a TON treasury plan. And we could perhaps see this accelerate before the bubble eventually pops and all of these companies are forced to sell these assets. But for now, this can end up putting a lot of upward pressure on price before it ends up reversing. So we'll see what happens. It's great to see Ethereum up 50% over the past 12 days, now greatly outperforming both the Nasdaq and the S&P 500 and slowly working its way back to where Bitcoin is. Solana is still lagging behind a bit, but perhaps with its own spot ETF later in the year, we could see it do quite well as well. But I am optimistic on the month of August and maybe even early September because of everything I'm seeing across this market. Now, the reason why things begin to get a little bit more concerning in September is we are still seeing this downtrend in the global liquidity index. Now, this doesn't just look at M2 alone. It looks at the Federal Reserve balance sheet, the Treasury General Account, the reverse repo program, the European Central Bank balance sheet, the People's Bank of China balance sheet, Bank of Japan balance sheet, and then M2 as well. So I believe it gives a much fuller picture than just M2, which is what most people look at. And it has been in a downtrend for a while now, and it's pointing to a pretty rough time once we make it to about mid-September, but we'll continue to monitor this quite closely as we get closer to that time window. For now, the US dollar index is still grinding its way higher, which is putting downward pressure on global liquidity, and we'll see if this ends up changing. As of right now, we are almost guaranteed to see a rate cut in September, October, and November, but there are still some labor market and inflation prints between now and then. So this is, of course, a moving target as we get closer and closer to September. But if we see a huge rally into the September FOMC, because everybody is excited about rate cuts, and maybe the labor market data gets so bad the market starts pricing in a 50 basis point cut in September, that could be a perfect alignment for some type of major sell the news event going into that meeting. But it's still about a month and a half away, so a lot can happen in that time frame. I'm also expecting the Fed to announce an end to QT very soon because of what's happening with the labor market, but I don't think small drops in interest rates are going to be enough to save the labor market based on the negative momentum that's starting to build here. And we still have inflation quite stubborn as well, so I wouldn't be surprised if some inflation prints started to spook markets. But for now, growth is still positive. The S&P 500 is holding up okay, even though last week's candle was a bearish engulfing candle. We just really want to see this break higher and undo that reversal pattern to make sure that the S&P 500 doesn't enter a bigger correction here. But that's going to depend on what type of weekly candle close we end up seeing for the S&P 500, because I do expect that to continue to be a major impact on Bitcoin. But as we look forward, the federal government is still running huge deficits. That trend only seems to be worsening over time, and exponential debt growth means exponential money supply growth, as the debt has to be monetized because there aren't enough buyers of that debt. And the debt being monetized and devaluing the currency raises the prices of our risk assets that we price in that currency, like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.